What is up, guys? So, I wanted to make an update for this week because I haven't taken a trade since I think it was Monday. I believe it was Monday or Tuesday. Um, the reason I haven't taken any trades is because the market hasn't given me entry parameters, and that's the important lesson of this video specifically is that if the market doesn't give you what you're looking for, don't chase it. This is why I only trade from um, New York Open, in California it's from 5 o'clock around to 7, right? And if the market doesn't give me my entry parameters from 5 to 7, I don't take a trade. That is the limit. So today's lesson, I guess tip lesson, is limit your trading time. Okay? Because doing this is a factor for your overall trading success, right? Because you're only looking for a parameter. So let's say how much does this make a difference? Well, this is going to help you not to overtrade, one. Okay, so it'll limit your overtrading. Okay, two, as time goes on, you get more and more frustrated. It limits your frustration, right? And mental fatigue, right? At the same time, it's not as boring because honestly, like sometimes watching these markets is like watching paint, right? And sometimes it'll give you your entry parameter right on the open, but sometimes it'll be till 7 o'clock before it gives you an entry parameter, right? So what this is designed mostly is for psychology. So limit your trading time for psychology, right? Psychology reasons. Psychology tip. Okay, so what I'm going to do in this like part of the video series, this is like road to funded account, and for the next 2 months I'll be trading my account as if I'm trying to pass an FTMO challenge, right? Because I've developed a new strategy, and I'll explain it like at the starting of next week. But I'm organizing certain things to be able to give you the best value, I guess, or the give you something of value, like don't want to just be over here talking to you guys and you don't understand what I'm saying here. But psychology is huge. Psychology is like 60-70% of everything, and I know that you hear that a lot, but I personally, psychology is a passion of mine personally. So seeing how psychology affects you from that psychological view that I have is really interesting, and I feel like I have a lot to offer, at least in that aspect of psychology, because I know it, because that's something that I'm familiar with. So I'm going to, I guess, take these concepts like limit your trading time, and I'm going to explain why this affects your psychology, as I just did right here, and give it maybe a numeric value, or just try to play with it and stuff, and see how much that actually affects your overall trading. But if you were to make, a spaceship made out of Legos, this is one of the important parts. If you were to build anything, this is an important part of that puzzle. Okay, so today I'm going to tell you why, specifically in the market, I didn't take a trade. So we're in this daily range right here. We're obviously in a bearish movement. However, we are starting to show signs of reversal. See, got quasis forming over here. What I do expect is a rejection from here, maybe to this order block right here, mitigate this order block right here, or maybe this one right here, and then shoot back up. But that's just, educated guessing. I don't rely on that. You respond to the market, you don't react to it. You respond to what is given to you. Okay, that's what we do. Okay, we respond, we don't react. So coming down, obviously you have this 8-hour order block down here, which is a potential target, as well as I think it was missing price somewhere over here. Yeah. So we have the liquidity of this 4-hour order block that was ran during that time, but I'm going to show you. Okay, so overall we're in a bullish movement, right? We're in bullish movement here, bullish momentum, right? So we're looking at 2 entries, okay? 2 entries. So when we bring it back down, let me see, it's 5 o'clock. All right, so we're gonna get rid of this 5-hour candle because that information's not, we're not privy to that information when the New York opens ends. So we're gonna trade this like how we were trading it, as if New York is opening, right? So that's a good target for me already. We have this correlating intersection here with the liquidity of this trend line, and we have this low right here. And I know that we're in a bullish structure, but this right here could be a really good retracement, right? On higher time frames, this is good retracement. So we want to run this liquidity before we keep going up. If we keep going up. So what I'm looking for as far as a sell is this 1-hour order block. Why? Because it's not mitigated. You see this? We have missing price right here, or like the fair value gap or whatever ICT people call it, and that's cool. Like there's different ways of explaining it. So for me, this is missing price, right? And then you have missing price down here. So we mitigated this missing price over here. So now this is telling me, okay, we want to make a push up, right, before we make a push down, right? So my buy biased, I guess you could say my buy biased POI, as far as POIs, would be to see how, hold on, let me lower this music here. Okay, so my bias would be to see how we react on this level right here. Okay, this level. However, I do expect this to be ran because it also correlates with the New York previous low. And this order block doesn't look very healthy to me. You know what I mean? So to me, this over here is a little bit better target. So if it does fall, I'm expecting to come back down to the previous low down here, or come back all the way down here. But we're just in a range, okay? And because we're taking 1 minute position, 1 minute entries, it doesn't matter. We just need 20-30 pips to get our trade. But my bias here is bearish, okay? My bias is bearish right here. All right, so this is my POI for the 1 hour, a buy to potential buy, and potential sell is up here. Simple, okay? And that's just the 1 hour. So if you're looking at this, the entry, you're looking at, okay, what 2 entries can I take, right? And I'm using this order block. Why? Because this order block had a nice wick to the top and it took out this liquidity on the previous one as well. Okay, it can pierce it, and then there's this one over here, but this is a pretty decent order block right here. So let's go down in time, right? So what we're looking at, let's say the 5 minute entry. Okay, so it's 5 o'clock. All right, it's 5 o'clock. What do we have here? Okay, well, we have this breakout, okay, to the bottom. All right, cool. We have this breakout to the bottom. We have a retracement. We have a new low because this over here, this wick took out. This one is technically, this is relative equal lows, but we didn't close under it. Okay, so this is like, I guess you could say this is just a whole impulse down. However, this wick right here took out the previous liquidity of everything else. So this is a good buy right here. But it's 4:05. Okay, nobody's trading at that time. New York hasn't opened. But what do we see over here when New York does open? All right, cool. So what I'm looking for is for price. My ideal trade will be for price to come back to this 1 hour order block, look for signs of reversal, and then take the sell right here to this target, right? That's what I'm looking for, right? So let's say, I'm looking at, let's say price went up here and I got a sign of reversal, bam, there you go. There's your 1 to 7 right there. That's a healthy trade, That's a healthy trade. That's my entry parameters right there. Okay. But it didn't happen. What happened? This happened. We got the direction right. We pierced this 1 hour order block. We pierced this trend line liquidity over here on a higher time frame, but we did not get into the market. Okay. And you know what? It's okay not to get into the market. All right. So then now I'm saying, okay, well, we have this pierce of liquidity and it's 525. All right. Well, let's see if we can get some kind of reversal going here. All right. Some kind of reversal. Okay. So we come down here. We got short-term low break one. That's not good enough. We need 2 short-term low breaks. Okay. And it just kept going down. So we didn't have any entry parameters for a buy. We did have bullish quasi, but that's not enough. Okay. That's not enough for a buy. So we have a bullish quasi, right? We have short-term low break 1. Short-term low break 2 is up here. Okay, so price would have had to go down this and then come back down and then go back up. But price is way too choppy. You see, price is way too choppy right here. So could you caught a sell from right here? No, because no. Let me see. Let me show you why no. Go to the 5-minute here. Could we have caught a sell here? So from this high to this low, you could have caught a sell, but it's still too risky. Okay. We're looking for order blocks on top of this 50%. This would be a good place to sell, but it didn't reach that either, right? It passed the 50 and then it came back down. You could have taken a sell right here and then maybe done this, like for example, right here off of that 5-minute, and then just maybe put a stop up here, but that's way too big, right? And if you would have taken a sell right there, you would have got stopped on the next candle, right? And you couldn't have entered on this next candle because that range is too big. So here's what I'm saying. You want the high probability trades. That's what you're looking for and only what you're looking for. And if you chase the market, you're gonna get dragged. You know, it's like going swimming in the ocean. You know, you either surf with a wave or you stand there, you get smacked by the wave. You know what I mean? So today, instead of trying to take a trade, what we did is we say, you know what, I see the market, I see what it's doing, and I'm going to pass, right? I'm going to pass. So this psychological tool is part of our process, right? If the market doesn't give you parameters that fit what you're doing, don't take a trade, and only take a trade that fits your parameters. And your parameters, my parameters is 5 to 7. That's my parameters, 5 to 7, okay? If it doesn't give me an entry within those 2 hours, that's it. I'm done for the day. That's it. Because tomorrow's going to be another day. Tomorrow's going to be another opportunity. And you only want high probability trades. Okay? So those parameters yield you this results. Limit over trading, which causes losses. Limit frustration and mental fatigue, which causes losses, right? And it also helps with your discipline. Right? It helps your discipline. And it helps your mind psychologically. It helps your mind retrain, okay, your psychology. Because if you're like a medium in the middle, you're past like learning what order blocks are. You're past, you kind of know what you're doing. You're not necessarily profitable, but you're not blowing accounts either. This is your next step. This is your next step. So later I'll put everything together and I'll try to do a better job at explaining everything and put something out there for you. But for now, This is kind of the recap, and I'll catch you guys on the next one.